Hey everyone, welcome to your Algo Lab. In our last episode, we explored the 10-month moving average change strategy on global equity indices. If you haven't watched it yet, we highly recommend checking it out. The links to the previous episodes are in the description below. Today, we'll delve deeper into some optimization techniques. There are many advanced optimization techniques available. In this episode, we'll use one called grid search. As the name suggests, grid search is an exhaustive search technique used to systematically tune the parameters of a strategy. To illustrate, let's suppose we have a strategy with two parameters. We define our evaluation metric, which could be return, risk-adjusted return, or any other metric. In this example, let's suppose that we have the risk-adjusted return, where a higher value is better. We observe that the combination of parameters 3 and 30 yields the best result. Ideally, we aim for a pattern where the optimal combination is located within a zone of stability. This is important because we want our best parameter set to be robust, meaning that small changes in the parameters should still result in good performance. Returning to our monthly moving average change strategy, we have already implemented our benchmark buy and hold strategy and the 10-month MA change strategy. Here we focus on their annualized returns, highlighting where our strategy outperformed the benchmark for clarity. Since we have only one parameter to consider, the moving average window, we will concentrate on a single row instead of a grid, testing both shorter and longer timeframes. In terms of grid search, we'll select a few specific timeframes rather than conducting an exhaustive search. For long-term strategies, our objective is to find commonalities between similar assets, rather than pinpointing a specific parameter to maximize individual risk-adjusted returns. We use different backtesting methods for short-term and medium-term strategies, which we will discuss in future episodes. We'll select two parameters, 6-month and 8-month, which are below the 10-month MA change, and two parameters, 12-month and 14-month, which are above it. We'll run the complete program using these parameters and evaluate the results based on absolute return, maximum drawdown, and risk-adjusted return. Let's begin by examining the returns. We observe that average returns fall below the benchmark buy and hold strategy. In terms of the number of outperformances, 16% of the monthly MA change outperformed the benchmark. When considering risk or maximum drawdown, 97% of the monthly MA change strategies outperform the benchmark. Now we present the risk-adjusted return, calculated as the annualized absolute return divided by the maximum drawdown. In terms of the number of outperformances, we observe that the monthly MA change shows a 59% outperformance rate. While the overall outperformance rate is not particularly impressive, we see strong results around the 10-month MA change, which aligns well with our 10-month resampled MA. Let's examine some of the top-performing strategies in terms of risk-adjusted return, beginning with the 10-month MA change on the Nasdaq index. This strategy effectively captured significant uptrends. Notably, the strategy did well at avoiding large drawdowns, particularly during major events like the dot-com bubble and the 2008 financial crisis. Now let's take a closer look at one of the poorest performing strategies, the 14-month MA change on the FTSE MIB. This strategy generated losses primarily because the signal period was too long, making it slow to adapt to changing trends. Additionally, the FTSE MIB has mostly remained in a trendless state since 2009, further contributing to the strategy's underperformance. To wrap it up, today we ran a grid search on our monthly moving average change strategies across all global equity indices. While the strategy didn't enhance absolute returns, it did improve risk-adjusted returns. In the next episode, we will backtest the moving average crossover strategy on other asset classes, including fixed income, commodities, currencies, and cryptos. Be sure to check out our other videos. If you're enjoying the content, don't forget to like, subscribe, and hit the bell icon so you never miss an update. Thanks for watching, and I'll see you in the next one.